Hey guys, welcome to the channel. If you're new here, my name is Justin Nguyen, and today I'm going to be sharing with you some stocks that I've been buying and will continue to buy in the month of April. I usually release these videos at the beginning of each month, but the past few days have been a little crazy for me, so here we go. If you've been tracking the stock market the last few weeks, you know that things have been pretty volatile and crazy if you're personally invested in either growth stocks or tech companies. There were some days this past month my portfolio was up 5%, and then other days it was down 4%, 3%, and things were just going up and down. I haven't seen these big types of moves in almost a year. If you're newer to the stock market, weeks like this can kind of freak you out and make you not want to invest. But if you're truly a long-term investor who only invests in high-quality companies at good prices that will perform well in the long term, then volatility won't scare you. Because you know that your investments will do well over the next 3 to 5 years, and everything that's happening right now is going to be a tiny little blip in the chart. The reality is when stocks are being beaten down like they have been in the last few weeks, that's when you want to be buying them. You don't want to be buying stocks when they're constantly hitting all-time highs and trading at very rich valuations. Because of the current market conditions, it's really difficult to find good value stocks. And so the companies that I've been buying recently in the last few weeks and the last few months have actually been long-term growth plays, which means that they're going to be more volatile in the short term, but over the long term, they have potential for extreme amounts of growth. I haven't really been buying any value stocks since the month of February when I released the video of what stocks I'd be buying. And in that video, I made 3 purchases that were all value stocks, and they've gone up pretty well over the last few months. Since that video, Facebook was trading at around $258, and as of today, it's trading at $309, which is about a 19% increase from that video. I also talked about Lockheed Martin and how I was buying it at around $322. As of today, Lockheed Martin is at $378, which is about an 18% increase in the last few months. And the last company that I was buying then was Realty Income, and at the time it was sitting at around $59. As of today, it's around $65, which is around a 9 to 10% increase. On top of that, that company also pays a monthly dividend, and so it's made some substantial gains in the last few months. I share all that to say this: value stocks are easy to make money because you just buy these good companies whenever they're undervalued and you just wait for them to go back to fair valued or for them to get overvalued. Every investor needs value stocks in their portfolio to give them some stability and consistent growth in their portfolios. The reality is my largest investment positions are all in boring value stocks that I know will perform well in the long run, but they're not cool and trendy. And my entire retirement portfolio is all value stocks. None of them are actually growth stocks. This past year, everyone wanted to get into growth stocks because that's where money was being made. Growth stocks can make you a lot of money when there's a bull market and there's just a lot of positive sentiment in the market. But on the flip side, growth stocks can take huge hits whenever there's a lot of weakness in the market. This Bloomberg post puts it so well. This past year, people were buying growth at any price. That article was written before we saw this tech sell-off where some companies sold off 30 to 50%. Lots of people got burned in the last few weeks. Value investors, however, were probably oblivious that there was even a sell-off happening because their portfolios were doing well. And I share all that with you just to show you how I personally invest as an investor. I don't like to buy into companies whenever there's a lot of FOMO, greed, and positive sentiment around it. For example, a few months ago, value stocks, no one cared about it. But now everyone's piling their money back into value stocks. And in the last few weeks, we've seen some growth stocks fall by 30, 40, 50%, and that's when I like to buy them. When people are jumping out of those investments, that's when I want to get in. A big mistake that early investors make early on is they just like to buy the hype and buy what's trending. I actually like to do the opposite. I buy what people don't want to touch and what they don't like and what's not cool at the time, but the underlying business model is all intact and the company is extremely profitable and well run. In the last few weeks, I've piled tens of thousands of dollars into different growth companies that I believe in long term. The way I buy growth stocks is very different from the way I buy value stocks. I buy growth stocks in portions. I never go all in. I always start with an entry position and I'm willing to continue to buy the stock as it continues to fall. The reality is all of my recent stock picks, I've actually been pretty flat on all of them and I'm okay with that. And here's why. That's all short term. If the companies that I have high convictions on continues to fall, I'm going to still buy it and I'm going to keep buying it until it hits the bottom and I'll be buying it on the way up. I'm not worried in the slightest because I've done a lot of research into these companies and I believe in them long term. When it comes to growth stocks, you have to be able to stomach short-term volatilities. Some of my growth stocks that I've made a couple years ago were at some point down 20, 30%, and now they're up over 100%. So if you're buying growth stocks, you have to be willing to hold it through short-term volatility. Or if you want to use Wall Street bets language, you have to be willing to hold for the tendies. As the saying goes, you got to diamond hand it. Anyways, let's get back into the stocks that I'm looking to buy this month. So the first stock on my list is Tattooed Chef, ticker symbol TTCF. This is a company that I currently own. It's still showing weakness, which makes me a buyer. I currently hold 290 shares with a cost basis of $20.16. And as you can see, I'm pretty flat on this position, and I'm totally okay with that because it gives me more time to add more shares to build out my position. You can check out my analysis on this company in the previous videos that I've done. In this video, I'm just going to share with you new news that have come out since my last videos. On March 10th, Tattooed Chef announced that they were going into Target stores nationwide. That is a big deal. Not just one product, but 6 products. So you know what that means? I had to go to the local Target to see for myself. Michaela and I drove to the local Target in town just to see what they had in stock, only to find out they were almost completely sold out. They only had their cauliflower mac and cheese bowl, and so I bought one just to try it out. And for those of you who are like me and are just complete carnivores and all we eat is meat and we don't like any vegetables whatsoever, I was honestly blown away by the flavors in this bowl. The cauliflower in this bowl did not taste frozen at all. It tasted actually really fresh, and on top of the cheese and all the other things that they had in the bowl, I really liked it. And I'm not a person who typically likes stuff like this. And so I was curious. So I was like, am I just biased on this? And so I actually checked out some of the other Target reviews to see what other people were saying. And check this out, in just the last 2 weeks alone, so many people had good things to say about their products. You got 5 stars here, 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 5 stars here. As an investor, that's what I like to see. So time out. I just want to address something real quick. Getting a partnership with Target, not just in one store, but nationwide, that's not easy to do. It's not like some companies just like, hey, I'm gonna make a product real quick and I'm gonna hit up Target and be like, hey, can I put these on your shelves nationwide? Target only does that with products that they really believe in. Shelf space is not cheap. And the thing about this company is you can't really get it in too many places. You can really only get it at Costco, Sam's Club, Walmart, and Target. And their products at all of those locations are almost selling out. And so as this company continues to grow, create more products like they're planning on it, and they get more deals with all of these companies to put their products on the shelves, I think that the revenues is gonna increase dramatically in the next 3 to 5 years. And in my last videos, I've mentioned how this company has made all their money with zero marketing. None whatsoever. And so just yesterday, they actually released their very first commercial that they're gonna be launching. Because I'm new to YouTube, I'm honestly not really sure how these copyrights work. And so I'm just gonna show you this 12-second ad that they created anyways. Someone let me know in the comments how to do this properly. So here's what I love about their marketing strategy. It's not like they're just gonna release that ad to everyone and everywhere. Their 6-second and 15-second commercials are airing on a curated list of cable networks, connected TV, and digital media. The company expects the commercials to reach over 80 million people seeking more plant-based eating options and will strategically use geo-targeting with digital media to build awareness in specific zip codes within a 10-mile radius of stores with distribution. Now that's a marketing plan. As Tattooed Chef continues to market itself to the general public, I think that it's going to be a more familiar company to the average person. When a company has a high quality product that the people who try it love it, but the company isn't scaled yet, that's when I want to get in on an investor. Because when the company begins to scale and expand and reach the general masses, that's when the huge amounts of revenue and profits come rolling in. Okay, so I like this company. It's pretty obvious. I'm an investor myself, and I've shared in my previous videos way more of my bull thesis as to why I like this company. But when I look at the financials and its valuations, it's honestly pretty fairly priced. I've shared in my previous videos that anything under $20 for Tattooed Chef, I personally like it for a long-term position. And that was even before the news that they're gonna be in the Targets all over nationwide and before their marketing campaign actually launched. And so needless to say, anything under $20 now, I like it even more. From a valuation standpoint, they have a good balance sheet because they have over $200 million in cash and the company is only worth about $1.6 billion. That means they're not over leveraged and they have plenty of cash to be able to wear out any type of storms that they may face and also have cash to spend to further expand their company. So with everything going on in the stock market right now, with all the fear and uncertainty in it, I'm fully aware that Tattooed Chef can drop down to anywhere like $15, and I'll be totally okay to continue to add more shares. I have to be mentally prepared for that to happen, and so I'm holding a lot of cash in order to be able to buy more if it ever hits that price. But anytime Tattooed Chef goes under $20, I just nibble on a few shares and continue to add to my position. Alright, the next stock on my list is Palantir, ticker symbol PLTR. I haven't talked about this stock in a few weeks, but this is a stock that I'm still bullish on long term. I currently hold a position in it and I'm willing to continue to add shares. I currently own 230 shares of Palantir with a cost basis of $24.39. As you can see, I'm pretty flat on this investment as well, but I'm totally okay with that because this is my long-term growth play. This stock has shown a lot of weakness in the short term as it's down almost 50% from its all-time highs. Some important things that you need to know about my position in Palantir right now. The first thing is that Palantir is richly priced at these prices currently when you look at it from a financials and valuation standpoint. This is one of those companies that trades very rich, but I believe that over time it will grow into its valuations and way beyond that. This company is very similar to Tattooed Chef in my opinion in the sense that they both have really good products that people love, but not many people know about it, and they're in the process of scaling their business for more clientele. I like investing in these types of companies that have high quality products that haven't reached the masses yet because it has a lot of room to grow. When it comes to high quality companies like Palantir, people are always going to be saying it's overvalued. Something that I want to share with you about Palantir that's really important to know is that when you invest in high quality companies that typically trade at rich valuations, people are always going to be saying it's so overvalued. Although that's true, but you have to consider the growth potential of growth stocks. For example, many years ago, decades ago, when Amazon was just still a book company selling books to the masses, there were popular articles going around saying Amazon stock is so overvalued. In order for them to meet their valuations, they need to sell their entire inventory 3 times. That scared a lot of investors, and so people didn't want to invest at Amazon at the time. But I will say this, they didn't see the future growth potential of what Amazon would become. And in the same way, Palantir has a lot of growth ahead of itself. When they release their platform Foundry, that thing is groundbreaking and has the potential to grow so much into the commercial sphere. They've been landing all sorts of high-profile clients like Amazon, IBM, and BP. Palantir also has the huge benefit of being the go-to company for the US government when it comes to big data analytics. Just today, Palantir was selected by the National Nuclear Security Administration for a 5-year, $89.9 million contract. So a huge part of my bull thesis when it comes to Palantir is that they have so much trust, not only by the US government, but by some of the highest quality companies out in the world today. Palantir seems to be working from the top down, and here's what I mean. They currently work with some of the most difficult clients that you can get, like the US government and Amazon. So to have partnerships with the top dogs, it's much easier for them to expand into smaller businesses and organizations with their platform. And here's why this is important. I would not like Palantir if it was the other way around. Meaning if they had lots of small fish companies that they were working for and they were trying to build more trust to get the more difficult clients like the government and Amazon. It's harder for companies to create trust going upward than going downward. For Palantir to tell prospective clients that, hey, we work with the government, Amazon, IBM, that's going to create a lot of trust for the smaller companies to want to hop on board as well. So here's the recipe for success over the next 3 to 5 years for Palantir. They currently have a great product that the high top dogs love, the government, Amazon, and big companies, and now they're planning on scaling more into the commercial space and landing more deals with tons of more clients. And again, that's going to be so easy for them to do that because they already work with the best of the best. And that's going to be so easy for them to expand because they already work with the best of the best, and everyone's going to want to jump on board with what they have to offer. And if you're kind of confused with Palantir and don't know much about what this company is and what it's about, watch my previous videos where I go more into depth about what this company actually is and what it has to offer and my full bull thesis as to why I've been buying it. And the last thing that I'll share about this company that I'm really looking forward to is something that's going to happen on April 14th. On that day, they're going to have their double click event, which is the day that they're going to demo their products Foundry and Gotham to prospective clients to show them what it's all about. I'm not saying that that's going to happen again. I'm not worried about short-term spikes and stuff like that. But what I am saying is with this demo day, they can gain a lot more clients because they're going to show a lot of people what they can do. When you get more clients, it increases your revenue, which increases shareholder values for investors like you and me. So let's look at the valuation of this company. Currently, Palantir is at a $43 billion market cap, which means it's trading, again, very rich. If you're buying this stock right now, like myself, you have to know the risks that are involved. Short term, I may see a lot of volatility. I'm prepared if this stock continues to show weakness and breaks that $20 resistance level and goes into the teens. And if it gets down that low, you know who's going to be buying it. I am. And this is a reminder for you newer investors. Don't go all in when you buy stocks, but be willing to buy and make an entry position and continue to buy if that stock continues to show weakness. Buy it all the way down to the bottom and buy it all the way back up. A big mistake that I see many people make is they get really antsy and go all in too early. Sometimes they get lucky, other times they bought it way too early and ran out of cash to continue to buy. So with Palantir, I really like this company when it comes to a long-term perspective on it because I think they're going to be able to scale their business really well. And so for the last stock that I'm going to share with you, I'm actually going to share with you a few of companies that I may potentially buy depending on if I like the price. A stock that I've been adding in the last few weeks is Unity Technologies. In the first video that I mentioned this company, I told you that if it broke under $100, I would double out my position. So I did. I'm currently sitting on 50 shares with a cost basis of $104.59. As you can see here, I'm pretty flat on my investment, but if this company continues to show weakness and gets down under $90 in the $80 range, maybe the lower $80, I'll keep adding to this stock because I believe in it long term. This company is constantly landing deals with high profile clients. In the last few weeks, Unity partnered with a company called Here to work on some automotive technology. Here Technologies is the leading location data and technology platform. They're using Unity software to create technology that will work on the next generation location technology for autonomous driving, simulation, city planning, and digital twins. So if you drive a higher-end vehicle like a BMW or an Audi, in the next few years, the software in your car is going to be built from Unity technology. Another company that I'm invested in that I'm watching pretty closely, I mentioned in a previous video, is my riskiest stock investment, and that's XPeng. They announced in the month of March that they sold 5,102 EVs, beating their expectations by almost 1,000 vehicles. Not only that, they're planning on releasing another model, which is a sedan, to the masses. With the release of this new vehicle, I think that's going to increase their sales as well. In my last video that I shared my investment in XPeng, I was down like 25% on it, down like $900 and something. As of today, I'm pretty much just even. Another reason why I like this company long term is that they have the best technology when it comes to autonomous driving. Just a few days ago, XPeng announced that they set the record for the longest autonomous drive. So the reason I bought this company is because I wanted some exposure to the electric vehicle market in China. And I think this is the best company because people love their products as well as they have the best technology. And in my opinion, their cars look the best. As of right now, XPeng's trading at around $36, which makes their market cap at $28.4 billion. If this company goes to around a $25 billion market cap, I'm going to continue to add to my position just a little bit. And the last stock that I'll continue to watch is Teladoc Health. Since my previous video on it, I added to my position. I'm sitting on 20 shares with a cost basis of $180.13. As you can see, my investment is pretty flat here, but if this company continues to show weakness and dips down into the 160 range, I'll continue to add to this position. If you don't know much about this company, watch my last video where I give you my full bull thesis on it. Something I'll share about this company though is that people really like this company. If you check out its reviews on the App Store, it has tons of reviews and people love it. My wife actually just signed up for it this past week. I still really like this company long term. And if there's volatility in the short term, I'm not really worried about it at all because I know what I'm buying, I know the quality of it, and I believe in it long term. So make sure you go check out that video if you haven't already. I'll just share one thing about Teladoc that's really important to know as to why I'm bullish on it long term. I didn't mention this in my last video, but it's a big part of my bull case. Their recent acquisition of Livongo that costed them like $18.5 billion, I think was an incredible move. I don't know if you know this, but diabetes patients, Livongo's specialty, account for $1 out of every $4 spent on healthcare in the United States. That is a whole lot of money that is spent on care for diabetes. And so with Teladoc's strategic purchase of Livongo, they're going to be able to help a lot of people within that space, which is a big part of what people spend on when it comes to healthcare. And not only that, some people are saying that the total addressable market for telehealth is $600 billion by the year 2027. And because this company is only trading at $27.68 billion in its market cap, oh my goodness, I think that this company is going to be a growth beast long term. Well, there you have it. Those are all my stock picks for the month of April. Those are all companies that I currently have and own, and they're showing weakness in the short term. So I'm going to keep buying it for as long as they show weakness. As always, if you've made it to this part of the video, I just want to say I see you and I appreciate you so much. And so for those supporters, make sure you hit that like button and leave a comment down below to help me beat the YouTube algorithm. I hope you got a lot of value out of this video, and so go make that money.